Welcome to part two of the Grab series. Yesterday's episode, we went over a little bit of background on Grab, Southeast Asia GDP, and how fast it's growing and why it's great to be in that region as far as investing goes. The smartphone penetration in Southeast Asia. Also, we touched a little bit on GOTO and talked a little bit of how that company is doing in terms of its competition in Indonesia. So for this video, I'm going to focus mostly on some highlights from Q3 earnings, as well as what I'm expecting to happen or what estimates are for Q4 and beyond, and where I see the price going in the end of 2025 or 2026 and by 2027. So let's just go and jump right into it, you guys. I got this screen right here. Want to share from Earnings Hub. Shout out to Earnings Hub for this central place to look at earnings. Oh, that's cool. They actually updated it. Earnings is in 2 days for Grab. It's going to be on February 19 on a Wednesday, 4 p.m. Eastern. They are estimated to come in at $757 million for that quarter. And they are actually expected to not be GAAP profitable next quarter, which is actually, it's actually pretty interesting. That analysts are expecting that. I mean, for the most part, if they did come in at minus 1 cent, I think the stock might react negatively to that because of the fact that, they were just GAAP profitable. They don't want to see them unprofitable after a quarter of just reaching profitability for the first time. So if that were to happen, not sure how the stock would react to that. I do think that they're going to at least be profitable next quarter. I mean, we'll see. What it currently looks at, they raised guidance on the last quarter. I mean, let's look at last quarter right here. They came in at 716 million. So they beat estimates from 692 billion. They beat estimates of 3.5%. And rather than being non-GAAP profitable, they came in at GAAP profitability. I think that was about an $11 million figure for EBITDA. So, expecting them to again come in profitable for next quarter, but not by a wide margin. This kind of reminds me of SoFi when SoFi became profitable for that quarter, and how people kind of expected them to be unprofitable next quarter, and then they continue to be profitable, just like Anthony Noto kept saying over and over again, like, we're going to be profitable, and then they come in profitable, and like the market's just not surprised by it, and they sell off the stock, whatever. I mean, if that sort of stuff happens to Grab, yeah, I mean, it's going to suck, but at the same time, that kind of give you a little bit of opportunity to buy more shares if you haven't fully built out your position, if it does come down. That's the way that I usually look at it, is that if a stock goes down and the fundamental and thesis is intact, so then that means you're just being given a chance to buy it at a better price than it was the day before earnings. So kind of switch it off a little bit. For me, I have my position fully built out. I mean, if it drops further, I might add to it and so on, but I did fully build out the position. So going back over here, we could see that, actually make this bigger. We could see that they beat the revenue 8 out of 9 times. So in the last 9 quarters, they beat the revenue 8 times. Okay, so that means they're coming into this quarter with above 80% chance of beating revenue. That's on a probability basis. So we'll see what happens with that one. Now, for the other side, for EPS, it looks like they've missed EPS 1, 2, and there actually were no estimates around that time. So all the from Q3, 1, 2, 3, 4, 5, 6, 7, 8, 9. So out of the last 9 quarters, they missed EPS estimates twice. They came in above the last quarter. So I do expect them with an above 75% chance of beating EPS estimates at minus 1 cent per share. So we're coming into this earnings. It is rallying. Yeah, so it closed in, I think this is Frankfurt. So this is Germany. So it closed in the DAX at 13% up. So we can expect a pretty massive rally coming in on Tuesday. What happens from there? I mean, who knows? This is obviously something that's being talked about on FinTwit over and over and over again. When I take a look at this chart from a long-term perspective, look at this massive consolidation since right before 2022. They actually hit their peak right around the IPO time, and right before the massive drop in 2022. And since then, they literally have just been trading sideways here. I mean, they got down pretty low here in 2022. They were in the $2 range. back in the beginning of the year was a pretty good opportunity to add pretty heavy. That's when I was adding. And then they hit the 550, 560 mark, which is a good 52-week high from there. We've pulled back, and it looks like tomorrow we're going to be testing the 52-week high again. So like, what is this? What it actually, can I get a bigger view over here? Let's see here. All right. So what does this look like? It comes here, goes all the way down, goes up. There's your cup. And then here is your handle. And usually cup and handles are, I'm sorry. Okay. So when I look at something like this, I'm not basing a thesis on a technical setup, right? But cup and handles technically have a high probability of success, which means that it just like shoots up from there. But my thesis is more fundamental than anything, with the added incentive of a technical thesis, because I've looked at the charts. It's trading above the moving averages, which is good. And I mean, it's been consolidating for 3 years, which is great. It's getting a lot of institutional ownership and so on. And it's just like, I think this is a great company to hold for the long term. It's probably going to, I think it's probably going to see some rallying this year, maybe a 20% rally in 2025, if it doesn't already do that tomorrow. But I do think this is a great company to be in the long term. And yeah, if you guys haven't checked out the previous videos that I've done, I'm going to leave a card up here for yesterday's video that I just released. And that video is kind of going to the background, bring people up to speed to today when I released this video. The last video that I did that I released on Twitter, that was actually recorded back in November after the Q3 earnings. So it's been quite some time. Nothing's really changed, to be completely honest. I mean, there were some rumors and stuff about GOTO merging with Grab Holdings. And to be honest, that was like a $7 billion valuation for GOTO. So it's probably much higher as far as the valuation would go in terms for a sale price, maybe like around $8 billion. And Grab can afford that, especially if it's being sold in shares. But at the same time, you know, I'm not really tying myself to a thesis that they will merge and there will be no competition in Indonesia. I think competition is very healthy in any environment. You know, we saw the same thing for YouTube and Google being competitive with lots of other platforms. Mark Zuckerberg is trying to compete with, he tried to compete with Elon Musk with Twitter or X, coming out with Threads. You know, and then there's competition with Amazon in the US, with other smaller companies. Shopify is finding competition. SoFi is having it. All these companies have competition. And in my view, competition is great because it forces companies to innovate, to build on their own products at a much faster rate and incentivize to do it better than the other company, and like basically never back down and never have like a monopoly and be like, you know what, I'm just going to chill from now on because we already own the entire market. Like something like Amazon, I don't think they really have any competition in the US when it comes to online e-commerce platforms, but they're not going to stop innovating because they know, Jassy knows that one day there will be a conglomerate that comes around that tries to take over and does compete with Amazon, but Amazon wants to be light years ahead of that company, where it's like not even going to happen at this point. So, you know, we'll see what happens. But with Grab, to be honest, Grab is a $19 billion company. They're almost at $1 billion last quarter, $750 million. GoTo was only $250 million. So like they're not that. They are pretty far behind, but they're not that far behind in terms of their exposure. But one thing to remember is that Grab is in 8 countries in Southeast Asia. GoTo isn't even in more than a few. So, you know, one thing to admit though is that GoTo is in Indonesia, right? Indonesia is a very large population, very young population, also one of the fastest growing in terms of GDP. So there's a lot of good potential in Indonesia, but Grab is already in these other markets and continuing to expand. And they're working with Uber in all of this, right? So all that put together is kind of like a high level of where my thesis is. So we got the outlook for 2024. Grab is actually projecting, or they increased their guidance because their previous guidance was 2.7 billion to 2.75 billion. They increased their guidance to 2.76 billion to 2.78 billion, which is a 17 to 18% year-over-year growth, versus the 14 to 17% year-over-year growth. This is still phenomenal growth at the scale that they are already in. People can't expect Grab to grow at let's say 50%, right? They were growing at rates like that a couple of years back, but their revenue and the size of the company has grown so vast that it's very difficult to grow at that rate and while reaching profitability. So they are kind of doing both here. They're growing at a very fast rate because high teen growth is pretty fast, especially for a company this scale. But on top of that, being able to reach profitability is even tougher. So they don't want to relinquish that status in order to be massively growing. Like they're not exactly a software company. They need to remain competitive in this entire region. Group adjusted EBITDA is 308 million to 313 million. And that was a massive raise in guidance from 250 to 270 million. So keep in mind that this is on an adjusted basis, and the adjusted basis is usually accounting for operating expenses, which includes stock-based compensation, hiring the best top-class engineers for their product. So that is obviously a given. If you want to have the best product out there, you have to continue building and improving the best product out there. And excellent developers and engineers are not cheap by any means. In addition, they guided for 2024 to be positive in free cash flow for the entire year, and that remained unchanged. So let's look at the guide over here. This is on Ticker Terminal. Shout out to Ticker Terminal. Appreciate their service. I'm starting to use it, starting to get used to it. So please excuse me a little bit if I might be clicking something wrong. These are the quarterly estimates from analysts. We got 11 analysts covering the quarter that's coming up, reporting on Wednesday. The average is $257 million coming for the quarter, with the median at 752. Sorry, 757, median 752. That will be about a 16% growth year over year and a 6% growth sequentially. Okay, so analysts are coming in here. They're not expecting them to have like 20% plus growth. If they do come in a percent or two above these estimates, it's very possible the stock's going to rally. Now, I can't sit here and be a fortune teller and tell you what's going to happen to the stock. All I know is that in a long-term thesis is probably going to remain intact unless something substantially changes next quarter. But will the stock continue to rally? I mean, we'll see. I'm going to go over a little bit of some institutional ownership as well. They got some 13Fs that came out last quarter, and some interesting findings is there as well. For the annual estimates over here, fiscal year 2024, they're guiding for, estimates are for 90% growth. They're guiding for accelerated growth to 21% about for fiscal year 2025. Actually, I'm not sharing my screen. And 2026, they're looking at decelerating and increasing. But you know what? Probably just look at these first three right here, because there's 22 analysts reporting estimates for 2024, 23 for 2025, and 20 for 2026. And then when you go further than that, you have like two analysts and the one analyst, and then the numbers just get kind of weird there because the median is just so far drawn out and the average is crazy. Like if one analyst, like this one guy in 2028, thinks that Grab is basically going to double its revenue in a few years. And that's just his perspective. Like probably when we get closer into 2027, you'll see like 25 analysts under, maybe even more than, who knows. But currently on this year's estimates, they're trading at about five times EV multiple, enterprise value to sales. And honestly, that's pretty good. That's a pretty decent price to have. I'm not sure if this takes into account any future cash balance they might have in their balance sheet. They have $6 billion on their balance sheet as of Q3. I'm expecting them probably to have closer to maybe 6.3, 6.4 next quarter, amid any pay downs and any debt, whatever that might be. And then by 2027, they're probably going to have way more than that in their balance sheet. But by then, they probably would utilize that, maybe increase their buybacks. They might increase their buybacks from 5 million to a higher amount for Q4. And they might increase that over time unless, of course, they want to make a big acquisition. We'll see how that turns out for Grab. So over here, I wanted to talk about a little bit on some institutional ownership. All right. So if we look over here at the stock quarterly institutional activity, we could see here out of all the quarters they had so far, we had 638 million shares being added to institutions. We had 170 million sold, right? So the net amount of shares purchased on the institutions was about 500 million. Almost 1 billion shares purchased on the open market for Grab holdings on last quarter's 13Fs. Then this is what's reported so far. All right. So the latest institutional activity that we have here, everyone knows about Toyota. Toyota purchased 223 million shares. And this is a new holding for them. This is $1 billion position that Toyota Motors has. Toyota Motors is, I don't even know, I think they are the largest in terms of the volume that they sell. Tesla is the most expensive car company right now today, but Toyota is the largest in terms of volume. Let's just say if Toyota buys your company, $1 billion, right? That's, they think you're going to do well. Okay. Looks like this other company also, Perpetual Limited, bought 45 million shares. That's a new position for them. Arrow Street bought 33 million. JP Morgan Chase bought 28 million. So they actually increased their holding. They have 3 times the amount that they had last quarter. And over here, yeah, this is Toyota. And where is, hold on. Yeah, BlackRock has almost 100 million shares, almost $500 million. That's BlackRock. Those guys are crazy. So Tiger Global has consistently been buying heavy every single quarter. Q4 2022, they opened a new position after recently selling position, $60 million. The next quarter, they added 80 million. Next quarter, they added 182 million. The next quarter, they added 210 million. I'm sorry, that's how much they held. They basically added about 50 million per quarter, right? So last quarter, they, sorry, this is actually Q2. So they didn't, I don't think they didn't add in the last couple of quarters. But to date, they have about 100 million shares, which is a considerable amount. So they have quite a big stake in this company. You know, putting all this together, I mean, there's a lot of institutional ownership in this company. And usually institutional ownership is attributed with holding for the long term. Institutions don't generally trade in and out of positions at this scale. Maybe smaller hedge funds do, but at this scale, they usually don't. It's kind of like a Palantir where there's a lot of institutional ownership, say with Hood or Robinhood. And, you know, when companies start to buy a lot and accumulate a lot of these stocks, it tends to kind of reduce the volatility of the stock price. But that's not to say it can't happen, because then you put in call options and everything into this mix. Actually, let me take a look at here, for example. That's Tiger Global. All right, let's look at the call activity. Yeah, look at last quarter. Last quarter, there were over 6 million call options purchased. Overall, Grab has been performing pretty well about the last few quarters. In fact, a year ago, Grab is up considerably. Let's actually take a look at that price range coming in around here all the way to today's price. They're up about 42%. So they closed at $4.90 last Friday. They were up after hours, and they're probably going to be up about 10%. So if they are up about 10%, then that means that, if they're going to be up about 13%, actually, not 10%, then that means they're going to be trading at about $5.55 tomorrow. That's if it holds. Okay. And I'm not going to sit here and think that whatever's going to happen. But regardless, whatever's going to happen, I'm going to hold my position. I'm not really looking to trim or anything. This is a long-term thesis for me. I got shares and calls. So, you know, I might trim some calls if we do run a bit into the earnings just to reduce the risk. But, you know, I think for the most part, the bulk of my position is going to be held. We are trading currently, or we did close above all the moving averages. Specifically, the 200-day moving average sits around $4. The 20-day moving average sits around $4.70, and the 50-day sits around $4.83. So trading above all the moving averages is pretty bullish. On the RSI, we're looking over here at an uptrend here, which is very bullish in terms of the setup. We're seeing volume pick up quite a bit. Actually, let's look at the weekly volume here. Yeah, we're seeing the weekly volume pick up quite a bit above average. So yeah, I mean, I don't want to get too crazy when it comes to this. I mean, you know, there's Bollinger Bands and all that crazy voodoo stuff that we could do, but I'm not necessarily a huge technical guy when it comes to long-term setups. and fundamental reasons to be into a stock. So, I'll leave that to the experts. For me personally, by the end of 2025, I could see this stock trading around the 650 range. So from here, this is not including the gains we'll probably see tomorrow to the 650 range. That will be about a 32% rally for 2025. Actually, to be honest, I do want to see this though from the beginning of the year. So let's see over here. Whoops. All right, so beginning of 2025, the market closed right here, all the way up to 6.5. That would be about, that would be a 38% rally, which would most likely beat the S&P 500. The only reason I say most likely is because for the market to close 30% higher, 38% for the year, that's a pretty big move. That would put the S&P 500 around $8,000. And I'm not so sure if that's going to happen by the end of the year. If it does, I'll probably be out of a lot of stocks by then, but we'll see. But 38% rally by the end of the year is a pretty considerable move. Today, going from today, that would be a 33% move. So let me whip out my calculator here. So we got about a $19 billion stock times 1.32. That would mean about a $6 billion increase in the market cap for grab. I mean, that could happen. The market can stay irrational longer than we can stay solvent. So we'll see. But when it comes to 2027, I'm thinking that we end up around 750 by 2027. So end of 2026, which is a 50% rally. Excuse me, 50% rally from here. From let's say we reach 6.5 by the end of the year. Then that means that there will be a 15% rally after that. That's a very conservative price target. Now, when I say conservative price target, I have three cases of price targets. Okay. So I have my base case, which is generally, I'd like to say conservative. That is assuming a linear growth in terms of whatever analysts are estimating today, right? So the one that I showed you from Ticker Terminal, we saw what it said there. We said about 90% growth in revenue this year for this year. And then we saw about 20% next year. And then we saw, I think, that dropping down about 15% the year after that. And that's what I consider linear growth. Whatever the analysts expect, that's going to happen. But prices don't move up based on analysts' expectations. They move up based on exceeding analysts' expectations, which is my bullish case. My bullish case, I think that if things turn out well, if you have the US dollar, actually, let's take a look at the chart of the US dollar real quick. We've seen a ridiculous rally in the US dollar, moving all the way up to 110, where it peaked around the beginning of January. And this is when everyone thought the stock market was going to go into correction mode. So when the US dollar reaches crazy levels like this, it means liquidity is tightening. But we're talking about emerging markets. US dollar rallying is very bad for emerging markets. And that's the reason why you saw Latin American, the Bovespa, Brazilian stock market drop down into bear market territory. We saw Mercado Libre and Nubank dropping down to crazy levels I haven't seen since a week before that. We saw Grab Holdings down to about $4.50. And when you have the dollar pulling back, that creates quite a bullish setup, because a weaker dollar means a stronger local currency for a lot of these countries, and a stronger local currency means higher pricing power. So it's very bullish to see the US dollar pull back about 2.5% in the last few weeks. Not ironically, that has led to a price increase in a lot of these Latin American companies like Nubank and Mercado Libre, which are very big positions of mine. But also Grab Holdings got a little bit of a bid when that happened, somewhat around the time when GOTO rumors came in that they're merging with Grab. But I definitely do think that if the US dollar pulls back to, let's just say, low hundreds territory, that could be a very bullish setup for all emerging markets. And we're already seeing the market front run this today. If we look at the MSCI index, which is the emerging markets index around the entire world, this very much have done well since last June, right? If we go all the way back to, wait, hold on, MCSI. Okay. I'm sorry. Hold on. Let's just look at FXI. Okay. FXI is China, right? And then we have EEM, which is the emerging markets ETF. This has rallied pretty high ever since the dollar kind of topped in the middle of January. And look where it is today. It made a massive rally, like about a 10% rally. That's a lot for considering this large equity fund, right? So that's a good setup. And then also the US 10-year is historically bullish for when it drops. That's historically bullish for equities. And we saw this massive rally from September all the way up until January, but it wasn't up until mid-December when the market started to perceive that as bad, and it neared 5%. And then look where we are today. We're at about 4.5%, right? So I don't necessarily think that that the U.S. stock market perform as well as emerging markets, but I don't think all of them will go up. I just or outperform the U.S. markets. I just think that the majority of these growth stocks in these other countries will outperform the U.S. stock market, and that's the reason why I'm quite positioned heavily in ex-U.S. companies. So yeah, I mean that really takes care of that. I mean, if you guys enjoy this video, please again subscribe and like the video and turn on the notification bell. We release lots of content. Kris Patel and I do lots of podcasts with each other. We bring on some guests sometimes to come on here. We discuss everything, and I'm actually planning on starting a Grab monthly podcast, and might have a couple of guests join me. Kris might be joining me. Amit said he'll join if I start that up. So I'm looking to bring some people to that mix. Some people ask like, oh, is there going to be a Grab weekly? Well, there's not that much news when it comes to Grab to be able to constantly having a weekly edition. Even monthly, I would say it's kind of pushing it. Like, it's not something like a Palantir where you can have a Palantir daily because there's new news about Palantir every day. It's like such a highly covered stock, right? I mean, it's a US based company, so there's obviously more ears to the ground when it comes to that. But you take a Singapore company like Grab, and one good thing is that even though it's a Singapore company, it is trading on the NASDAQ. So it's not like it's an ADR where you technically don't own shares with the company. You own shares in a conglomerate that owns shares in the company. So there is no proxy for that. But yeah, I mean, I think that's there's pretty good. I think there's pretty good activity in Grab right now, and I think it's just it's a company that a lot of people don't know about, right? But it's also good to be mindful and realistic when it comes to it's good to be realistic in terms of expectations for how well a company is going to perform relative to the stock market. To think that the company is going to make like a 10 times from here in next year and pull like a Palantir or Hims or something, I would say that's exceeding expectations. To be completely realistic, you saw my price targets. I would say they're pretty conservative. I'm not trying to I'm not going out there trying to pump the stock saying it's going to be like we're $20 in a couple of weeks, right? I would be nice, but at the same time, like, would I sell if it did? I'd probably trim a good amount, but I wouldn't sell the whole position. Like, I think this company's going to do very well for long term, and I'll be happy to own this company for years from now. So yeah, we'll see how things goes, guys, and hope you enjoyed this video. Again, check out the live broadcast tomorrow. Going to be doing the earnings live with Amit, and hope to see you guys there. Talk to you guys later.